Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, daily chart, and that's a daily chart. This is the one day of the year that I show a front month chart versus a continuation chart, just because it's the roll. I hate the roll. I hate the roll. Most traders do. I'm not a spread trader, therefore I hate the roll. So from my perspective, the room has hit its daily, weekly, and monthly goals at this point. So we're not going to do much with the roll today unless we really get a setup that we liked. As for yesterday, what you saw a reaction off of Draghi. You saw the bears given every opportunity after that on the fade down to take out and control the 200-day exponential moving average. This is what we discussed yesterday. On the continuation chart, on the March chart, that was 94. In the case of June, it's at the 1989 area. We traded as low as 67, came right up against the 100-day exponential moving average, which we had spent a couple weeks ago turning from resistance into support. It held here again as support. Support here, and they have gone and done 40 handles right up in the bears' faces. Ripped them all higher, got them caught out over the tips of their skis, and just took them out. Now, is this going to last? I don't know. I don't know. You've got the ECB out of the way. You've got the Fed meeting coming up, and I mean, I entitled my webcast yesterday as "The Bulls have a path to 2040 if they want it." They still do, if they want it. That would work out to about 2031 and change on a June chart, but if they want it, they can go and take it. The best way to do that would be to follow through on the new highs that they've already made in the overnight session today. Yesterday's reaction high on the June chart was 01. The highs today 0125. So we've got a higher high. This is a classic situation on a Friday where the bulls can follow through if they can find, if they can find it in them, they can keep pushing. Now they've already, we're already up 1%. We've already come from fairly far down, but that doesn't mean it has to stop. Shorting something just because it's gone up a lot is usually a really bad reason to short. Just like, buying something because it's gone down a lot is usually a pretty bad reason to buy. I'm currently flat. My intention is to see how we open in the regular session, see whether we want to make whether there's a dip there to be bought, or whether we're going to have kind of a blow off high that we can sell and just kind of work the day in from there. But as I said initially, I'm not going to do much today because I don't like trading the roll. I would rather come back Monday when everybody's on the same page. We don't have half the people trade in March, half the people trade in June, and then go forward from there. All right. So just be careful and understand. Are we going to pull back at some point? Yes. Are people still fighting this rally tooth and nail? Yes. So when they're done fighting, then we'll start pulling back. All right, everybody have a fantastic day. Have a fantastic weekend. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back Monday morning with another webcast. Trade them well, everybody.